Hello there, my friends. Chris Marcus here with you on Wednesday, November 1st. And today, a quick video, some shocking news. Fed leaves the rates unchanged. Fed is going to raise rates, just not today, not this month. They say it's going to be this year, but who knows? So in either case, let's just take a quick look through the article today. Again, I don't think this should come as much of a surprise. As always, we're 10 years past the beginning of the crisis. Rates have gone back up to 1%. We haven't even reached the point where they were before the Fed started lowering them. So I point this out not to sit here and constantly just make jokes and giggle about the Fed, although that coat she's wearing there, sure. Janet Yellen's wearing there with the collar, sure is pretty slick. But my goal is not to sit here and just rail on these guys endlessly, although their actions just is sometimes you don't know what else to say except that it warrants that. So in any case, here we go. Fed left short-term rates unchanged. Officials have penciled in one more move for 2017 if the economy stays on track. Interesting phrasing there because, again, that's what they always say. We're going to watch the data. The markets are great. We'll raise interest rates. If something happens, which when you actually look at the world, there's every indication and sign that things are happening now. Cryptos are going nuts. Russia, China are giving every indication by the day that they've had enough of the dollar. We continue to hear the rumors about China buying its yuan, or buying its oil and paying in yuan rather than dollars, which certainly, if you talk about infringing upon the role of the petrodollar, at least in my mind, certainly one of the biggest signs you could get that these things are happening. So, let alone North Korea or a new war somewhere. So sure, they're going to raise rates if everything stays on track. Unfortunately, there's so many things waiting to go off track that we'll see how this goes. Maybe it'll take another 10 years before we get around 2027. We'll get to 2 or 2.5%. Here's interesting. The Fed said economic activity has been rising at a solid rate despite hurricane-related disruptions. Gross domestic product rose 3%. Janet Yellen, ongoing strength of the economy will warrant gradual rate increases, which all sounds well and good, except what about the fact that, let's see if we can pull this up. Last week, basically, you had Janet Yellen. Well, there we go. Janet Yellen saying that there is apparently now a high probability that unconventional policy, I don't know where that's going, but basically, if you go onto Arcadia Economics, I can figure out how to get to my own homepage. You would see this article here where the Federal Reserve changes the story again. This was just last week, and apparently there's now a high probability that unconventional policy is going to be needed again. Again, those are not my words. I believe that's, if you watch the video recorded there, an actual quote. So which is it? Is everything getting better and rates are finally going to go up? Or is, for some reason, a need for unconventional policy? My guess is that the Fed continues to talk about raising rates, does it slower than watching paint dry, and then at some point notices that the volcano is already going off here and actually does go back to their unconventional policy. Translation, more money printing, which when you think about it, is really naturally what you would expect, because anytime you goose the markets with tons of printed money and then you undo it, there's that temptation as the stimulus starts wearing off to say, well, geez, we need more printed money. It's what the Fed's been doing for decades, so from my standpoint, keeping that in mind and taking what they say with a grain of salt, always a wise idea. And so with that said, leave your comments below and we'll keep you posted on what's happening. Thanks for watching.